Hi guys, welcome back to Shreya Talks on Market. I hope you guys saw my first video, and in that first video, we clearly saw, how Nifty has a big resistance at around 18,500. So if you see, I had shown you guys the monthly Fibo levels, and if you see this 18,500, I had drawn the Fibo based on the previous ATH before pandemic till the pandemic low, and from there we saw the Fibonacci extensions where 18,510 was coming as the no, 23.6 percentage extension of 2.236 2.236 percentage extension of the current rally. So I had told in the previous video that 18,500 is going to be a very big resistance, last weekend. And even now, let us see what happened from Monday. Monday was date was 18th. So if you guys see on 18th, we opened at around 18,500 and we couldn't close above 18,500. We closed at 18,477. Tuesday again we opened higher at around 18,600, but we again close below 18,500. Closing is the most important thing in the day, and if you see from Monday, we couldn't close even a single day above 18,500. Why? Because 18,500 is a very big resistance level based on the monthly Fibo chart, which I just showed you guys. Now coming back, all red candles this week, and if you see now, Nifty would have taken a intermediate support in this level. If you see, this level is the previous consolidation breakouts retest. So it's I won't say that the we are done for now, or the rally might resume 100%, or the fall we may not fall more. But what I can see now is, till we hold 18,000 levels, okay, or maximum, if you see this 20 EMA in the daily chart is coming around 17,968. So if I take a round figure, say 17,950 or so, or even some traders for the safer side, for the big volatility which is there, so we can take 17,900 levels. So I would rather now play for a pull back from these levels with 17,900 as the stop loss. And once we close above 18,400, right, we can even see a new ATH in Nifty. So guys, the Nifty view for the next week is, guys can have a very safe players can have a stop loss of around 17,900 in Nifty on a closing basis, or on a, 17,950. Or if you are very aggressive, you can keep yesterday's low as the stop loss, or 18,000 as a stop loss. But I would say, on a safer side, you can keep 17,900 as a stop loss, and go long in Nifty now. And who knows, we might even break the previous ATH and hit. Now if you see the monthly chart, we are already done with 18,500. We never know, we might even see 19,200 levels. If we close above 18,500 at least in a day, and we sustain there for a couple of days, we can see 19,200 levels. And this I had told in my previous video too. So we never know. Like, since if you see in the daily charts, we are at the previous breakout retest zone, so it makes a lot of sense to go long here with 17,900 as the stop loss. And and we can expect 19,200 levels, and immediate target, I would say, will be around 18,400 levels. So this is the view for Nifty for the coming week. And apart from Nifty, I would say, like, I would want to show you two more stocks which are looking very, very good. First stock is HDFC. If you see, HDFC on Friday has given a very good breakout of its previous all-time high. Its previous all-time high was around 82,896, and HDFC has closed around 2,903.95 Friday closing. So it has given a very good breakout, and if you see, there is a very good cup and handle formation here, and which has given a breakout, so we can expect good movement in this current stock. And I would say there is no resistance, at least till 3,130 levels. You can play for it with the stop loss of 2,770. And for guys who are looking for investment, you can go long here with 2,690 as the stop loss. Okay, this HDFC is looking very good. We don't know, like, what is going to be there in the future, but for investment purpose, I would say it may reach 3,500 levels. But for people who are looking for quick trades, they can go in here for a quick target of around 3,130 to 3,100 levels. You can see very good movement in that. And then maybe it may come down, go down, but no, this cup and handle target is around 3,500. So HDFC right now looking very good. Another chart which is looking very good, which I would want to show you guys, is Axis Bank. Axis Bank, if you see, pre-pandemic high, many stocks have crossed the pre-pandemic highs, but Axis has not crossed it yet. And I am very hopeful that this time it may cross its previous all-time high, that is pre-pandemic high was 827.75, and now Friday high was 827. So you can take a trade. It will be a very good risk reward trade, once it crosses 827 on any day. You can take this, and if you see, there is a beautiful head and shoulders which is there here. So people looking for investment for around 2 to 3 years can can also buy once we close above 827 or 830 on a daily closing basis, and we can expect a target of around 1,300 levels too. So for now, I would say, like, in the daily chart, the immediate target which I can see of is this, there's this one cup and handle here, and the target would be around 850 to 900 is the immediate target. But for people who are ready for waiting for 2 to 3 years, so for them, based on the weekly cup and inver uh, based on the weekly head and shoulder pattern which is visible here, we can wait till 1,300 levels. You can just trail your stop loss, and this looks very good for me, because it's breaking out after a very long time, and the chart pattern is clearly visible here, head and shoulder pattern, which is a very good pattern to trade. So guys, for the next week, you can see these two stocks, you can keep them in mind. First one was HDFC, which has already broken out on a daily closing basis as well as on a weekly closing basis. and this axis, which is again looking very, very good in the charts, and you can go long above the Friday high. Okay, guys, so that's it for this week. See you guys in the next week. Take care. Bye bye.